First up, we'll begin with the November jobs number. 146,000 non-farm jobs were added last month. That is well above forecasts of 80,000. But October and September payrolls were revised lower. The unemployment rate fell by 0.2 to 7.7. That is the lowest, as we said, in 4 years. The dip occurring mostly because more people stopped looking for work and were not counted as unemployed. As for Hurricane Sandy, the Labor Department says the storm did not substantively impact the November results. And that, Jim, probably was the biggest surprise to everybody.
Right. Look, this is a very strong number. I think only the U.S. government now can stop this kind of job growth. A fiscal cliff go over.
Snatching victory from the jaws.
A superstorm. Nothing can stop the creation of jobs in the U.S. economy.
There's a great article today in one of the papers about how apartment building, we have a shortage of apartment building. We have a shortage of housing. We have a shortage of autos. The shortage of office buildings developing, shortage of shopping centers, shortage of shopping malls. This is what begins a boom. And you have to hire eventually. Now, I know completely you could say, well, listen, there's people not looking for work. Oh, come on. Look, jobs are here, but they can stop. It can be just easily reversed if you have no idea what is the future because of Washington.
But given the data points that we've had in terms of claims numbers that did reflect an impact from Sandy, ADP, which did reflect an impact from Sandy, they said, 85,000 jobs or 86,000 jobs were sliced because of the impact of Sandy. Average hours worked unchanged. Doesn't that, I don't know, start to question just a little bit the participation in the survey?
Well,
how could it have no impact whatsoever? It just seems curious to me.
It seemed curious. It does call into question whether these numbers can be accurate. We've now been starting to think, let's check the accuracy. Why isn't this done by SAP? Why aren't these numbers done by Oracle? Why aren't they done by Salesforce.com?
Because those are private companies.
Well, I'm just saying that you would not be questioning the data if it was done by a company that got a contract like SAP and put these numbers together. Because I'm beginning to question how these numbers are put together. That number was, I agree with you. Sandy has no impact.
On the number of hours worked?
A lot of the country was shut down during Sandy. It does seem strong.
Even before the number hit, David, people were saying you got to incorporate poll workers for the election. You had holiday hiring. You had Sandy. It may be the Journal today argued it's the least important jobs number in 5 years.
Right, I saw that. And there are certainly a lot of cross currents. I do think, though, that one thing we can certainly say, given that China seems to be stabilizing a bit, we can all discuss Europe. Greek situation, maybe it's off the front pages for a while.
Right.
And so if we assume that the jobs picture in the U.S. is not bad, let's all assume not bad,
thank you.
It puts even more of a focus on the fiscal cliff negotiations because it becomes even more binary, one would assume, in terms of good or bad for the market, for the economies.
Although Curtin had a good point. Does the strength mean the economy could handle a cliff? Or is it so good that you wouldn't want to tamper? Jared Bernstein.
If I wanted to create a recession, let's see what would I do? I'd raise everybody's rates. I'd cut at the unemployment benefit. I'd get rid of the payroll. I'm just trying to think of a theory of how I could cause a recession. I would throttle back government spending very quickly.
I'd raise interest rates to 20%.
Let's slow that in. Bernanke ought to join the
Volcker crowd.
Look, I think here's what's going to happen. I think it's 50-50 we get a deal by I have no vacation, no legislation, no vacation. But I think that when people get their paycheck at the end of January, they are going to be shocked how much less
slower
they're
it
making.
is.
I know these guys in Washington, I guess their paycheck's not affected. Right? They taking a roll back there. But I think when you get your paycheck, you're going to say, I hate that. Because it is going to be that big. It's going to be the takeout's going to be big. And those who aren't hit by that, the AMT at the end of the year, suddenly you're going to write a check right when you're supposed to go to Macy's. Because you cannot believe how much. This is it's a terrible thing. And those who think it won't matter, I think that their paychecks must be so big, maybe it doesn't impact them. Part of the 2%.
And there should be a deal. It doesn't matter.
I think there should be a deal. And yes, Republicans, I want spending cut big. Democrats, I don't really want my taxes raised. Because these are the things. Yeah. As soon as you say that it's okay that we have taxes increased, the Republicans immediately say, oh, you're not in favor of spending cuts. I want spending slashed. You cannot make up the budget deficit just by raising money for rich people.
All right, let's move on and talk Netflix. Receiving a Wells notice from the SEC, regulators warning they may bring civil action against the company and its CEO for violating public disclosure rules with a Facebook post. Now, back on July 3rd, CEO Reed Hastings posted Netflix monthly viewing exceeded 1 billion hours for the first time ever in June. The SEC's Regulation FD requires public companies to make full and fair public disclosure of material, non-public information. Hastings is dismissing the SEC contention, saying he did not believe the Facebook post was material information, although that day the stock was up 13%. Now, in a letter yesterday, he also suggested the fact the post was accessible to more than 244,000 subscribers to the page makes it very public. And this brings up a very good question, because you can choose to disclose information through other venues that are considered now fair under FD that may reach fewer people at the end of the day.
Yeah, it ain't up to you. It's up to the government.
It's up to the SEC.
It's true. The rules are the rules right now.
And these things do need to evolve. There seems to be little doubt about that. I mean, listen, I remember when FD was put in, and I would have conversations with executives and say, you can tell me I'm on CNBC.
Right.
I will make it public. Right. I'm not going to obviously do anything else with it except incorporate it into a story that I'm using.
Right.
Sometimes that would succeed. It's taken us a long way from the days in which you'd have executives sit down one-on-one and more or less share things
with the big guys
that they should not have, or at least that they should have shared with everybody, or even analyst meetings that were closed. I mean, I remember getting thrown out of the Time Warner analyst meeting many years ago. It's hard to imagine. Yeah, they saw me in the bathroom. They said,
the bathroom?
Yeah, the head of PR said, you got to leave. So that's where we were not that long ago.
I
was just, making my hair look.
Like it's always an issue. I would be allowed to stay if that was the issue. Now, David, do I have to be friends with Reed Hastings?
Well, that's the thing I wonder.
I don't want to befriend him to get the number.
Right.
I mean, I don't want to.
What if you don't want to go on Facebook? What do you want? If you don't want to be
or does one go to Facebook for financial information? Right. I mean, what if you disclose something to a very large newspaper in some other country where no one, the number of followers, the absolute number of followers,
what if it only reaches 100,000 people in that country? How is that
these are
more
interesting
fair?
questions for the SEC. I mean, listen, we used Twitter, many of us. I use it as a wire service, frankly, and then I use it also to distribute news. Now, I distribute that news, of course, on CNBC as well, but I use it as another channel of distribution. Should that be considered fair disclosure?
Well, remember, there was a discussion earlier on Squawk about the notion of free speech. And the SEC does not care about the First Amendment. They think that this interstate commerce clause, they think that the securities, the 34 Act, just completely trumps that. So the idea of making a First Amendment case is just stupid. They're not going to let you do it. They just don't. They don't recognize it as part of commerce.
Well, it'll be interesting. A Wells notice means they are likely to take action. There is a defense here. You can still make it it gives the opportunity to at least make a final defense, so to speak, as to why they shouldn't take action. That is the commission. But we'll see what that defense is from Mr. Hastings. I mean, we already have a sense for it, given what they wrote in the 8K yesterday.
And I'm sure this will be very closely watched. I mean, we should be clear that to Netflix, we didn't see too much of a reaction in the stock for good reason, because this is really a slap on the wrist. In the scheme of things, but this will be closely watched, because I'm sure other companies will want to know whether if they tweet something, is that fair disclosure, if they use Facebook, and that's going to really have some ramifications in terms of how companies choose to share information with investors. The other point it raises, just thinking about information that can move the markets, and this is separate from the SEC and a Wells notice, but there are many days where we have economic data that is released, and it is released a few minutes beforehand to subscribers to that service. And you have to wonder, well, is that fair? I mean, that's not the SEC's purview, but it just raises all these issues of what is accessible to the broader public versus subscribers, either to Facebook or to a service.
Interestingly, on the stock, even though the S&P is not above its 50-day moving average, there are hundreds of components that are above that. Netflix is one of them that's trading above by the biggest amount. I think it's number 3 on that list.
Oh, but they're going to pay Disney a ton of money. No, that's really good. They're now better than HBO. Oh, he's a scofflaw. No, it's really good. He's more powerful than ever. I mean, the stock right now is in that exact opposite mode of what it was in before. Everything good. Everything's now reflected through some sort of positive prism. Next thing you know, we're going to have to start watching Lillehammer, whatever that program you had from.
There's another season that's coming out, apparently.
Is there really?
Yeah, they've gone into another season of production on that.
Stop trading.
Meantime, shares of McDonald's are higher in the pre-market after Janney this morning surveys some franchisees and finds that they're going to take their rating to buy from neutral. Firm says its survey of McDonald's franchisees indicates November same-store sales in the U.S. might have been better than analysts have been anticipating. As a result, Janney raising its U.S. comp sales forecast for November to 1.7%. They were at -8, and they see flat sales for McDonald's in December. That's both above consensus. Not the only call out there, Jim. Deutsche has got one, too.
Right, this big. It's big because the downtrend has been pronounced. It's big because there are a lot of people who have fled the stock. The stock did go up yesterday, up again pre-market trading. I do believe that if you can reverse the U.S., the stock can go to the mid-90s because there's so many people who have been negative on McDonald's. Just incredible negativity.
The caution, though, in both of these notes is that it's coming up against very tough comparisons. December of last year showed U.S. same-store sales growth of up 9.8%. And so we were lapping a period where the next couple of quarters are going to be rough. But after that, the anticipation is that things will actually get a little bit easier because the comparisons will get a little bit easier as well.
I'd like to know the components. What's selling well? What did they do? I mean, a lot of what happened in Skinner's final years as CEO, new products. A lot of people felt that the momentum was they got you in and they had some surprise factor, a wow factor. I don't know.
Well, does this wow you? Fish McBites or an onion cheddar burger? Because both are going to debut apparently on the dollar menu by the end of December.
It would wow my cardiologist.
Fish McBites. Yeah. They had a picture in the Janney note of the Fish McBites, and they're like little round balls of fish.
Corn.
Of what?
Are they fried?
Well, Chicken McNugget is largely corn.
Is it? So you think the Fish McBite is also largely corn?
I'm just being
me.
Yes. I'm being
You're
you.
You're being Faber.
I'm being me and you.
Well, let me put a damper on all
the
that.
Chicken McNugget. First of all, the chickens eat corn, so they're basically corn.
Oh, yeah.
Right.
They're just little corn
true.
substitutes, the chickens who can't stand up.
This conversation has become
Mr. Rogers.
weird.
And then the whole thing is corn. So you're eating a corn ball.
I just wanted
so maybe the fish is a corn
true.
ball, too.
It's true.
Wow.
You're right.
So next thing you know, we have to buy Archer Daniels Midland and sell ice.
No, it's already
Well, we should. I mean, look,
Netflix.
they have
right.
they
I
have
have
a
no
new
idea
head
where
of
I went
U.S. And the stock's in a bit of a show-me stage, but climbing into the mid-90s, Jim, as you suggest,
Look,
that would be a big deal.
It's been on hiatus. People love a new name. I mean, remember, a lot of Yum had a big analyst meeting yesterday. Some people are circling back to that. Howard Schultz told a good story at Starbucks. Initially, the stock went down, then went up. People are desperate to find something new to buy.
Yeah. And in an environment of rising employment, that's a big deal for McDonald's, especially in the breakfast business, which is a high-margin business. Right. So it is highly leveraged to some macro indicators, too.
Yeah. I mean, look, I felt confused just when I go there. There's a promotion going on that didn't bring me into the store. I want to be brought into a store because of a promotion, not discover, wow, I paid much less than I thought.
Well, I told you about the McBites. Are you going to go into the store now?
I think they're called McCornballs now.
Actually,
we just changed the name.
Actually, in truth, I've become a vegetarian.
Very up to date on the
menu.
McDonald's
I'm
menu.
impressed.
Yesterday was McRib.
Yep.
She knows.
Well, these are
yes.
very important to the stories of these fast food chains, and that's why I'm so.
They put the calorie count. What's the calorie count? When you see the calorie count is the determinant. When you go there, say, oh man, can I have 3 Lipitor or not the Ranbaxy Lipitor with the glass in it?
Right.
That's what I'm on right now with Torvastat.
The glass
in it?
Are you really?
Well, it's good. The glass is very good
where's
for
your
your
bad
arteries
cholesterol?
too.
Where's your bad cholesterol?
It's not good. Not good.
Mine's 80.
Well, goody for you. That's what happens when you get old. You compare cholesterol levels.
Yeah.
No, I've gone vegetarian.
Tell me your handicap.
I had turkey-less turkey last night. I got it at Trader Joe's.
Turkey.
It is so
that
good.
Sounds disgusting.
It's turkey-less turkey. And I like tofurkey, too. For the record, tofurkey, me, what's not to like?